Hello, this is a video companion to the Small Gold blog post, Precious Metals ETF Demand and Record COMEX Open Interest Drive Gold and Silver Prices Higher. The main story in 2016 with respect to gold and silver are the massive increases in the prices of both metals. But recently, we've seen in the last month major surges in the price of silver and gold, but we haven't seen a corresponding increase in physical demand, or at least physical demand as I'm able to discern it. Now, for the past 3 years, silver has gone down, 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 while silver demand has gone up, up, up. Some of the major increases in demand come from the major sovereign mints who hit record silver sales in 2013, 2014, and 2015, with the US Mint, the Canadian Mint, Austrian Mint, Perth Mints all selling record amounts of silver in each year in increasing amounts. But yet the silver price went down. India imported almost 300 million ounces of silver in 2015, and yet the price of silver went down. Similarly, on the gold side, Russia and China upped their gold purchases the past 3 years, 2014, 15. The gold sales by central banks had increased for the first time in a number of years, and the price of gold also went down the past few years. In 2016, silver sales have increased from January to June in a major way. All the major sovereign mints are showing increases over 2015's record year. But recently, starting in June, now let's just make one thing clear about coin sales, silver coin sales. Currently, they represent about 22 to 25% of the overall silver demand. 10 years ago, they only represented 5%. So it is relevant now what the coin sales are when you analyze the silver demand concept, because they do now represent a large portion of the silver demand. Now, the industrial demand is somewhat constant, and the industrial demand is about 50-55% of demand, and that doesn't change much. It goes up, it goes down, but it doesn't go up in the dramatic way that the coin sales do. So that's why I'm focusing on the coin sales. Now, this year, for the first, as you can see on this chart, the first 5 months of the year, the US Mint sold over 4 million ounces of silver each month. In many instances, each of those months represented record months. For May was a record May. I think February was a record February. Then in June, the sales went down to about 2.8 million, a respectable number, but not the 4 million they had been doing. What seems to be slightly jarring, though, is that in July, up to date, only about 550,000 Silver Eagles have been sold, and that's of today, which is, what is today? The 13th of July. The chart shows 425. That's of sometime earlier, late last week. But in any event, it highlights that July, looks like, is not going to sell perhaps even 2 million American Silver Eagles. So what's happening? Well, does this mean that demand is going down for American Silver Eagles? Possibly. What it means, though, is that the US Mint is not selling the 1 million Silver Eagle that they were selling on allocation each week to the authorized purchaser. The authorized purchasers are not buying in those amounts which they are entitled to do. And that's perhaps because earlier in the year, the authorized purchasers stocked up on American Silver Eagles, and perhaps they weren't necessarily selling them earlier in the year. And now retail demand may be higher and they may be selling those Eagles, but they're not restocking them at the same rate. So in the last 6 weeks, we've seen a drop off in the purchases of American Silver Eagles by authorized purchasers. That doesn't mean that people aren't buying them more, but it's an indication that the authorized purchasers aren't too concerned about their inventory levels because they're not replacing them in large amounts. It's another chart. Again, you can see all these charts at the blog post at the link below, Precious Metals ETF Demand and Record COMEX Open Interest Drive, Gold and Silver Prices Higher. You can see in this chart here the record sales of the last 3 years, 2015, 13, 14, and 15. And perhaps 2016, since we've had this slowdown the past 6 weeks, may not be a fourth record in a row. And one of the reasons for that perhaps is that the US Mint very cleverly overstocked its authorized purchasers earlier in the year to avoid the perception that there might, because if they run out of silver eagles, then there's a shortage. And when there's a shortage, there's a mania. And when there's a mania, then the price goes higher, and then people seek out physical gold and silver, and there isn't any. That doesn't mean there's no silver. It means that the US Mint doesn't have enough blanks to print silver eagles on to meet the demand. And we saw what happened last year. When that happened, there becomes an even greater increase in the interest in silver eagles, and that drives, as you can see, the premiums up. So last year in September and October, the premiums on American silver eagles went up to almost 50%. As you can see now, because the dealers are well stocked, premiums on American silver eagles are now almost at all-time lows. You can get silver eagle premiums for very close to what the authorized purchasers pay, which is just $2 over the spot price. That's the fixed price, no matter what the price of silver is, that the US Mint charges the authorized purchasers. The authorized purchasers then sell them to retailers, and then they mark them up and sell them to you. But because they bought a lot of silver eagles earlier in the year, the authorized purchasers, at $14, $15, and $16 an ounce plus the $2, they're now able to even make a profit because they've held those by selling those to their dealers at something very close to $2 or perhaps even under. And then some dealers may be able to sell them to you at about $2 over spot because the price has risen and still make a profit. So the American Silver Eagle premiums have gone down. That to me indicates that there is not any tightness in the market as of yet. So why is the price of silver going up? Well, as we've talked many times, the price of silver is not based on supply and demand dynamics, because if it was, the silver supply demand dynamic has been in deficit for years, meaning that supply has not kept up with demand. Silver trades on sentiment. And one of the areas where sentiment is displayed this year, as you can see, is the increase in the amount of supposed silver in silver ETFs has gone up almost 100 million ounces since the beginning of the year. Also, what's driving the price of silver up is the open interest on the COMEX exchange. As you can see, it's at all-time highs. So what's driving the silver prices higher is not necessarily the physical buying, but is the paper buying, the buying of institutional investors piling into silver ETFs, and then of course the open interest in the contracts on the COMEX. And as you can see, the COMEX is fairly well stocked with about 150 million ounces of silver. That's total silver. It's not separated into eligible and registered for these purposes, but just showing that a lot of silver has flown into those warehouses and at some point is presumably available to deliver if someone decides that they wish to take delivery on their contracts and not roll them over. Now, gold is the same story. The physical sales of gold, at least in the United States, American Gold Eagles, as you can see here through end of June, 406,000 ounces. Now that is not very much. That's the American Gold Eagle 1 ounce coin. 406,000 of them have been sold so far this year, which, China, the People's Bank of China bought 480,000 ounces worth of gold just last month. So the retail sales on the gold side, in the form of the top selling American coin, the American Gold Eagle in the United States, is basically subdued. I think it was 62,500 American Gold Eagles 1 ounce were sold last month, which is nothing near any type of mania. It's insignificant in the overall grand scheme of things in terms of gold demand. But where the gold demand is coming from, which is driving the price up, is in the dramatic increase, as you can see here, in gold ETF demands. That's where Soros, Druckenmiller, and all the famous hedge fund managers are piling in. They're buying gold in the form of ETFs. If you want to read something on gold ETFs, I've written a recent article comparing gold ETFs and purchasing physical gold. That's outside the scope of this podcast, but it's worth checking out. I go through the differences between and the advantages of buying physical gold versus gold ETFs. But institutional investors definitely are piling into these gold ETFs, and they're also increasing their positions on the COMEX. As you can see, the open interest in gold is also at all-time highs. And Consequently, you also see an increase in the amount of gold that's in the COMEX warehouses. So what we're seeing is, and it's really no different than when the price was dropping, the price of silver and gold dropped not on the basis of actual physical supply and demand, but upon sentiment and paper trading of gold and silver. And now gold and silver are rising. Yes, there has been an increase in demand, but there's not a direct correlation, a physical demand, that the gold and silver are really rising because of the increased open interest in gold and silver on the COMEX. Also Chinese buying on the Shanghai Gold Exchange. That is, again, it's not as high as it was last year. It's high, but still. So basically, it's the sentiment and the paper trading, which still moves the gold and silver markets more than actual physical supply and demand. Thanks for listening, and please remember to subscribe to smallgold.com by going to the top, filling in your email address. You'll get the weekly, in case you missed it, email, which covers basically the stories during the week of gold and silver, the top stories, and also what you might have missed from Small Gold. And also please subscribe to the Small Gold YouTube channel. Thanks again for listening.